This week's top crypto gainers are not moving for the same reason, and that is the risk behind the headline numbers. AI update is the keyword, but the actual market story is uneven momentum across DeFi, DAOs, meme assets, and modular infrastructure. RAVE was listed with a 14.32% weekly move, while MemeCore gained about 42%. Those numbers demand attention, but they do not tell viewers whether liquidity is deep, conviction is durable, or leverage is building in the background. That means a viewer should not treat the whole list as one sector rotation, because the strongest percentages may come from the least stable liquidity. RAVE and MemeCore belong to the high-volatility side of the screen. A 14.32% weekly move can pull in traders quickly, but it also raises questions about exit liquidity and concentration. Exit liquidity means whether enough buyers and sellers exist for people to leave without forcing the price around. MemeCore's rise points to renewed speculative appetite in meme-style assets. That can move fast, but it can also reverse fast when sentiment cools. A move this large can be real and still difficult to trade safely if order books are thin or holders are concentrated. Celestia and DZ show a different type of momentum. Celestia rose 32.71%, while attention centered on modular blockchain infrastructure and the V8 Hibiscus upgrade on the Mocha testnet, with mainnet release expected later. DZ moved more than 22% and reached its highest level in over 12 months, with open interest rising back toward pre-correction levels. That does not make either move safe, but the mechanism is infrastructure and governance, not just a meme rotation. For these assets, execution milestones matter more than the weekly candle because infrastructure claims need delivery. The DeFi blue chip part is also split. Lido DAO gained 30.97% after a $20 million buyback program, which gives the move a clearer demand mechanism. AV recorded more than $535 million in 24-hour volume and received support from Fireblocks, giving over 2,400 institutional investors access to AV-enabled yields. The open question is trust, because service provider exits have created internal pressure that AV still needs to address. That split makes AV different from a simple volume story. Institutional access is useful, but governance trust still needs repair. The AI update read is to separate the moves by mechanism. A DAO token with explosive upside, a meme asset, a modular chain upgrade, a governance token, a buyback-driven DeFi name, and an institutional yield platform are not the same trade. A green weekly screen can hide very different risks. The number tells you where attention went. The reason behind the number tells you whether the move has a stronger foundation. Separating mechanism from percentage gain helps viewers avoid mixing temporary hype with changes that could actually affect protocol usage. That is especially important when one asset moves more than 1,000% while another rises because of a buyback or infrastructure upgrade. The next AI update signal is follow-through inside each category. RAVE and MemeCore need liquidity that survives volatility. Celestia needs upgrade progress and developer response. DZ needs governance activity that matches the price move. Lido needs buyback execution. AV needs institutional access to expand while its DAO repairs trust. The useful question is not which asset moved most. It is which move has a mechanism that can still be verified. That approach turns a noisy leaderboard into a checklist: liquidity for extreme movers, delivery for upgrades, execution for buybacks, and trust for DeFi. A leaderboard can identify attention, but it cannot rank balance sheet strength, code delivery, or governance quality. Those details require separate checks for each asset.